Today we'll be talking about the potential silver short squeeze. Please keep in mind that the factors discussed today is relevant to gold as well. It's just in my opinion that silver is being suppressed more than gold. Again, please perform your own research. These are only my own personal opinions with my own research. These are the topics that we'll be going over today. We'll start off with the physical situation, then we'll talk about COMEX and how the futures interact, and then the ETF situation, and then touched up a little bit on the silver and gold ratio, and finally talk a little bit about the silver mining stocks. So first off, let's take a look at the silver physical situation. Currently, the trading spot price for silver is 27.95 US Canadian for 1 ounce and 37.33 for Canadian for 1 ounce. However, the physical, like if you actually go out and try to buy a physical 1 ounce bullion, obviously if you buy bigger ounces, like if you buy a bar, if you buy bigger bars, your premium would be lower. But let's just take 1 ounce Canadian maple leaf silver coin. I try to look at the American Eagles. The American Eagles were actually more expensive, so I just kind of picked the cheapest one, which I found was the Canadian maple on Sprott Money. Honestly, if you can find other ones, that's great at cheaper price, but just for comparison's sake. So for physical spot for the US is looking at 38.03 and Canadian at 45.31. Once again, I just pulled these prices from the website and you can see the premium is actually really high. And the reason for that is because of the physical shortage. So obviously we're going through a pandemic with COVID and a lot of the mines are actually closed. And that's kind of why you have this pretty big physical shortage. On top of that, you'll see later on the trading spot price has actually been pushed down artificially. Now, before our next slide, let's talk about the COMEX. So the COMEX is a commodities exchange, and it trades a bunch of stuff like precious metal, gold and silver, industrial metals, energy, agriculture, etc. And the kind of main purpose, there's kind of two, are for hedges. So what hedging is reducing risk. So for example, let's say you're a farmer, you got cows, and you're trying to sell some milk, and you want to lock in your price today for the future because you don't want to take any risks. You have to buy, your farm, you gotta buy your, equipment, etc. You don't really care if the price go up in the future. You just don't want it to have to take any losses in the future if the price goes down. So you go into the COMEX and you say, hey, I would like to sell a contract for a year from now to sell milk, and you lock in your prices now. Obviously, there's premium, but that's the cost for you to trade. You move your risk to the other party. So that's what the cost is for hedging. And speculators. So speculators would be someone who doesn't have whatever the product is, or they're not actually looking to get it. So let's say if you're a user of oil, so let's say the airlines, then they would actually come in and possibly hedge for the oil prices. But if you're just someone, just average Joe without any use of any of these products, and you just want to get exposure to the prices, then you can come in here and speculate. So let's say if I assume, copper prices will go up in a year from now, or like in a few months, I can buy the contract today at a certain price and expect the contract to be worth more in the future, and I sell out. So I don't actually take delivery. So there's kind of two things you can do. You can either settle in cash or take delivery. Now that we covered what COMEX is, for the silver COMEX situation, currently the open interest, so I literally just pulled this off the CME Group website. As you can see highlighted in yellow, the open interest for future for silver future is sitting at 207,000 contracts, and for each contract it's at 5,000 ounces. And if you do the math, that's over 1 billion ounces currently outstanding. Now the annual production, keep in mind only a portion of the annual production actually goes into investables, because a majority of silver production goes into industrial uses. So I just Googled it. As you can see, 2018, 2019, about just over 800 million ounces. 2020, maybe we'll hit, let's round it up to, I don't know, 900 million ounces. But with the mine closures, I really don't know if we'll hit that target. But as you can see, the total amount of contracts out there is more than the annual production. And again, keep in mind, only a portion of the annual production for silver actually goes into investables. So this means they won't be able to get those silver to settle these contracts. Obviously, you have speculators who just buy in and out. They're not looking for delivery. But if enough people or enough contracts actually ask for delivery instead of settling in cash, that is a huge bullish factor for the metal. Now, there has been instances, like some people might think, oh, they won't ask for delivery because that would just crash the COMEX, and they're probably right. Where the COMEX, like if anything happens, if the counterparty just can't pay out, they'll probably just let them settle in cash. But the thing is, if they're trying to settle in cash, that means they have to buy back the contract. That is an upward pressure on the future prices. Now, the question is, who are actually these seller of these contracts? So a lot of them are actually the commercial banks, because they make money off just, speculating. And if you actually look at the daily charts or weekly price action, sometimes you're going to see, I think it was Tuesday this week, where there's a big drop in silver price. And what happens is a lot of people who have these contracts, if they're speculating, they have stop losses. And a stop loss order is just a mechanism to protect yourself from, like, a massive up or downswing due to volatility. So let's say I bought something at $10. I'm only willing to lose like 10%, so I put a stop loss order at 9. So if the price of whatever I bought goes below, like once it hits $9, it automatically sells, or like it sells it back, and I kind of contract my losses to only 10%. With what these commercial banks can do is, because they have such like big amount of money to play with, they can go into the market, they short whatever they want into big amounts. So they push the prices down, and because of these stop loss orders, they get executed, and then the price get pushed further down. And then once it gets to a level that the banks are happy about, then they just buy back and they make the difference. But the problem is, a lot of people are actually going into the COMEX buying up a lot of contracts. So the inability to push both the price and open interest down is actually costing the commercial banks a lot of money. So what we could see here is a potential situation with what happened in, I think it was March, for the negative oil, but in the opposite direction, where the longs were caught in that situation, where this time around the shorts are caught. Well, they might, we'll see. So let's talk about the silver ETF situation. I think recently with silver prices going up, a lot of millennials on Robinhood accounts have actually bought in to try to get exposure to silver by going through um, the ETFs. In my opinion, I probably won't do it just because you take the risk, like, does the ETF actually have the metal? Where are they getting it? Like, that's another question. And, so on and so forth. I think yesterday inflow, we saw about 6 million inflow. But if we actually do the math, so we take the math from previous slide, 900 million per ounce for annual production, and we divide it by, a year, 365 days, and we see in a day, it's just short of 2.5, but we'll round it up, about 2.5 ounces daily production. But not all of the silver, again, that's mined goes into investable. Some goes to industrial. So there's a big mismatch. Now, the question is, where are these silver ETFs getting their physical silver that they're supposedly holding in trust? And if they actually go out there and try to buy these physical silver, what do you think is going to happen to the price? Now let's talk about the silver and gold ratio, or gold silver, but I just kind of flipped it over. It looks easier, I think. For March low, I guess March high, but during the March low in terms of prices, we saw, I think it was the highest level ever of 125 to 1. So it took 125 ounces of silver in order to buy 1 ounce of gold. Well, since then we've actually decreased a big reversal. I guess not too. That's pretty big. It's now at 72 to 1. Historic average over the thousands of years have been about 15 to 16 to 1. Now, production, meaning like in terms of mining it, is about 8 to 1. And the ground, so like geology, it's about 12 to 1. And bullion buying, so like the actual money that's going into buying like gold and silver bullion, is about 5 to 1. And so in my opinion, I'm expecting, like, to me, it's quite possible for the gold silver ratio to go back to the historic average, the idea of mean reversion. And so we could see one gold, 1 ounce of gold equaling to 15 ounces of silver. Something I forgot to say in the last slide, with my anticipation of gold and silver ratio going to about 15 to 1 instead of where we are, which is 72 to 1, I'm expecting silver to have a lot more room to run as gold continue to rise. Now, in terms of the silver mining stocks, I've already discussed some picks in the previous video, so feel free to check that out. But the mining stocks recently have actually been lagging, and I think this is due to investor sentiment, where I think yesterday silver was up like 6 to 7%, but some mining stocks were actually down like for the day. And I think this is because they are anticipating this silver rally to not last, so they're trying to sell their stocks before the metals goes down. And to me, this seems like the sector is climbing a wall of worry, and that is actually pretty good long-term bullish sign. Now, finally, in my opinion, again, please do your own research. I would think in this precious metals bull run, the silver mining stocks will be the star. So again, best of luck in your investments and research, and have fun.